right, let's look at some of the numbers, starting with what happened overnight in the United States. Wall Street finished mixed, helped by gains in Alphabet and Meta, while some investors refrained from making big bets while those talks continue about raising the U.S. debt ceiling. The U.S. President Joe Biden and House Speaker Kevin McCarthy could not reach an agreement yesterday on how to raise government's debt ceiling by nearly $31.5 trillion US dollars. Those are the figures we're talking about. And this is only 10 days before a possible default. While there is a major concern, the markets are not pricing anything like a default yet. The S&P 500 gained a fraction. The Nasdaq Composite gained about 0.5%, but the Dow Jones Industrial Average fell by 0.5%. Well, Asian markets set the tone for us today, closing deep in the red South African time this morning. The Shanghai Composite Index fell by 1.5%, the Hang Seng by more than 1%. After some optimism, markets again seem to be concerned about that possibility of a US default. In the good news, Japan's manufacturing activity expanded for the first time in 7 months in May. And let's look at what is happening right now. You can see the board moving behind me. European markets are in the red, I can tell you. The German DAX was recovering a little bit earlier, though, after surveys showed German business activity expanded in April. The JSE is significantly lower. There you can see more than 1% down at the moment. Industrials and resources are dragging the bourse down. Meanwhile, after recovering by 1% yesterday, the rand is little changed. There you can see it's looking for direction. Yesterday, the rand was spurred on by bets that the Reserve Bank will increase interest rates. To discuss, we're now joined by Martin Smith, who's a portfolio manager at Anchor Capital. Martin, thank you for being with us. Let's start with interest rates that are likely to go up again. A Reuters poll is suggesting a 25 basis point hike. Markets may be looking at something bigger. What are you expecting?
I think 50 basis points is what we're going to get on Thursday, unfortunately. Not good news from a South African consumer perspective. I think what's pushed us over the edge is the fact that you've seen the rand weaken quite significantly in the last couple of weeks. And obviously the effect that that'll have from a second order effect has come through. So, excuse me. So I think the big thing there is 50 basis points is now being priced in. I've seen some guys say as high as 75, but I think 50 will be the number. But hopefully we'll see that unwind quite quickly towards the back end of the year as you see inflation off a kind of a higher base from last year, which means that inflation will come off and hopefully you'll see interest rates start to get cut from towards the back end of this year, hopefully.
We hope. I mean, 50 basis points is quite high enough for many indebted South Africans, I'm sure. And you alluded to something. The rate hike isn't only about controlling inflation, but trying to bolster the rand as well. When you look at the rand now, some are seeing that it's not linked to other emerging markets currencies as closely as it used to be, meaning that the rolling blackouts are playing a big role. If that is the case, I mean, is the Reserve Bank trying to push a rock up a hill here?
Yeah, very difficult position, right? Because we are in a position where the rest of the world is increasing interest rates. Inflation in South Africa is really high, but we've also got the problem where we're struggling from a GDP perspective relative to someone like the United States. So you don't want to push interest rates up too aggressively because obviously the effects that has from a GDP perspective and a consumer perspective, and we don't again have the room to maneuver like the US does. But at the same time, we've got higher inflation, and that's obviously filtered through, also kind of exacerbated by a weaker rand, which we've seen in the last couple of weeks and months. And you're 100% correct. Usually the rand tracks emerging market currencies very closely, but you've seen a bit of an extra premium being put in there because of the risk around our power grid and the like. And then obviously on the news of the US ambassador and his comments a couple of weeks ago pushed the rand even weaker. So it's a very, very difficult position that the SARB finds themselves in, but they can only do what they can do. And I think 50 basis points is probably the right number as much as it's going to be difficult for consumers to swallow.
Yeah, what we need is some good news when it comes to rolling blackouts. All right, just because of time, let's move to global markets. And the focus is US debt. It's always this concern that the US is going to run out of money, but it never does. What do you think is going to happen?
No, I think we'll see a resolution, because what's happened at the moment in Congress, you've got two parties, neither of which have a majority. So there has to be a little bit of cooperation between the two. So you'll see political back and forth, but usually this gets sorted out. And like you mentioned at the beginning of your show, the market isn't pricing in any type of default happening. And I think that'll be the case. Like you mentioned, we've also got about 10 days before that deadline. So I think we'll see some news before that happens. Yes, you might have a chance of a default, but that's a very, very, very unlikely situation. And I expect to see it get sorted out in the coming days. And like you mentioned, I think markets are a little bit jittery around it, because the market doesn't like uncertainty. And we are operating in quite a low volume, low conviction environment at the moment. So it does play in the back of investors' minds, but I think we should see some sort of resolution in the coming days.
Does this matter in terms of when the US may stop raising rates or even start cutting interest rates there? Because as we seem to often follow, that could affect predictions for when interest rates could start coming down here.
So I think they do have some maneuverability in terms of their budget and where they can cut and move that deadline out a little bit. But from an interest rate perspective, I think it's more about what inflation is doing and how the labor market is doing. I think those are the two biggest drivers of interest rates in the States. And I think depending on what this upcoming jobs number looks like, it could depend to see if we see a pause in interest rates from the Fed, which I think is probably the more likely scenario from here. And then hopefully towards the back end of the year, cuts start to come through from the Fed, although that's probably going to start at the beginning of next year only.
Anything else you're watching here or abroad?
I think the big thing at the moment is we're so macro focused, because again, in South Africa, we're worrying about inflation, the rand, what's happening from an Eskom perspective. And the same thing is true overseas. We're looking at the debt ceiling, like we just mentioned. You're looking at interest rates, inflation there, jobs numbers. So it's a very macro-focused picture at the moment, and we are very much going from data point to data point. So I think that's kind of what's driving investors at the moment.
All right, thank you so much. As always, Martin Smith from Anchor Capital. More business news after a short break. Stay with us on Point.